Good afternoon, everybody. Welcome to the Fierce Trade House. Miss Fierce here. Thank you so much for tuning in. If this is your first time on my YouTube channel, please do me the honors. Please like or subscribe. Feel free to drop a comment as well if you want me to do a specific video on a topic related to what you're learning in your Forex journey. So today I just want to do a very basic, like we're going back to the basics. And this is just because one of my beginners students asked me to just recap support, resistance, and trend lines. They're just starting to learn and they're getting a bit confused. And so this video is specifically for that. Now, when we look at gold here, it's very clear what's happening to the market. Price was up here at some point. It dropped, formed like a floor here and then pushed up, and this is what's been happening. So there's been a downtrend here, uptrend, and that's basically how price moves. It moves down, moves up, moves down, moves up, or does the opposite. You can see here it moved up, it came down, it moved up, then it kind of slid down slowly, pushed up again, came down, and that's how price moves. But just the basic anatomy of price action, we're looking at the basic movement of price. This is how it looks like. So this here is an example of an uptrend. Okay, so I'm just going to label it. Again, I'm assuming this is valid or informative if you're a beginner trader, first time trader. So this is an uptrend, and when we look at the uptrend, okay, price, this is how price moves. Okay, so price will push up generally from a point. It starts somewhere. So let's say this is the low of the lowest point in time when price began to push up. So this is a low. I've marked it out as a low. Price pushes up, okay, and then it finds a resistance, okay. Some people call it a ceiling, a high, okay. So I've marked this out as a high. And why is it a resistance? Because it bounces off this level, meaning that it stops pushing up. So where you see that there's kind of like a pivot happening at a specific level when price is pushing up, that is a good indicator of a high or that price has gotten to a resistance. And then it rejects or it pulls back or it retests a previous level, okay, or of structure here. And then it bounces off that level. So again, as it's retracing, it bounces off a level and fails to continue to the downside. So this level that forces the price to bounce off and now continue to push up is what we call the support or the floor or the base, whatever you want to call it. And then price continues on its way up, and this just continues on and on. Now, what you will notice is that price moved from this low and then moved to this high. Now, when it was retracing, it did something interesting. It bounced off, yes, and formed another low before it continued on its way up. Now, this low here vis-a-vis this low is actually higher, okay? And hence we would like to call it the higher low, okay? So this is the higher low. It's higher vis-a-vis this other low. And then price pushes up and forms a high, but a high that is higher than this other high, okay? So this one, we'll call it the higher high. So that's basically what keeps on happening with price on and on and on as it's pushing up. It moves from a low to a high, to a higher low, to a higher high, to a higher low, another higher low that is higher than this higher low, and onwards in continuation. Now, if we are on a downtrend, so the opposite is true. You can see these arrows are pushing downside. So we are moving down. Price will push down, okay, and then it will form its first low, okay, because it will be bouncing off yet another support here, and then it will push up, reject this level. So when you see this pivot happening, this rejection, this turn in price, this is the low, okay, and this is now the support. So it then pushes up and then it forms a high, okay, and then continues down. But now, if you're looking at it in terms of, the continuation of price, you'll see multiple highs and multiple lows. similarly to what we're looking at when we're looking at the uptrend. So let's say this was the high, it came low, then when it came here, what it did was it formed a lower high here, a lower high. So this high is a valid high, okay, which bounced off a resistance, but it's lower than this high. And then it dropped and broke structure here at this support, okay, broke through the support and then formed a low that was lower than this. So this then becomes a lower low, okay? A lower low. So that's basically how price moves on a downtrend. This is moving down. It moves from the high to the low, to the lower high, to the lower low, and it keeps on going on and on and on like that. And then in an uptrend, it moves from a low to a high, to a higher low, to a higher high, and so on and so forth. So if you're able to understand that, okay, these highs here, they are also, you can also call them swing highs, okay? When you talk about it in Forex terminology, when we're doing our analysis, we usually hear traders saying price pushed from a swing low to a swing high, to another swing low, to another swing high, and so on and so forth. On the as it was moving, or it moved from a high to a swing low, from a swing high to a swing low, to another swing high, to another swing low, and so on and so forth. So what is a swing low? Because my student also asked me to just, again, re-clarify, what is this swing high, swing low, swing? So it's just basically highs and lows. But the thing is, if you're to look at it from a chart perspective, okay? So first of all, let's identify the trend. The trend, if we look at it from this zone that I've marked out here, and I can just remove this here. The price of gold has been pushing lower, okay, or it pushed lower. Maybe I can even maximize the chart a bit so that you can see a bit better. So price pushed down, okay. Now, when it pushed down, it was coming from a high, okay, which can also be a swing high, okay. So this was the high, and then it pushed down. So at a point where it stopped dropping, we can see it kind of stopped dropping here and then rejected. We can also see another level here that actually also stopped dropping and then kind of pushed up. But this is the significant one that I'm looking at, really, okay? It stopped here, then it pushed up, okay? Formed another high, okay, here. Formed yet another high, but this high was lower than this one. So this is now the lower high, okay? Now, if we look at it like that, we're on a downtrend. So on a downtrend, all we see is lower highs, lower highs, lower highs. The opposite is true. On an uptrend, all we see is higher highs. So let's say this is a high here. Okay. And then we see a higher high. Okay. And then we see yet another higher high until we get to the very high up here. So this is an uptrend. When we are moving to the upside, all we are seeing is higher highs being formed. When we are moving to the downside, all we are seeing is lower highs being formed. Now, when we look at it below here, okay, so this is the highs. What about the lows? Okay, so it comes from a high and forms a low. Okay, so let's say it forms a low here. So I'm just gonna mark it out as a low. So this is the first low. Okay, this is the first low that has formed after price dropped. We can even maybe identify this one, but let me just look at the one I can see with my naked eye. And that's what I tell people. Don't overcomplicate your trading. because someone will ask me which high should I really focus on. It doesn't really matter. You want to look at the highs or the lows that are obvious to you with your naked eye without you thinking too much about it. So for me, this is what I'm seeing. It could have been this one for you, but this is for me, right? So price pushed from this high to this low, and then it formed another low and yet another low, okay? And you can see there were several lows here. We could even say maybe this was a low because it's a bit of a rejection. Then it formed another low here again, and this was the lowest of the low. But as it was going down on the downtrend, and maybe I can even do the same with this, price pushed up, and then when it came down, it formed a low. So let me put this low here on the uptrend. There was another low here somewhere. There was another low here somewhere, and then it pushed up, right? And then there was also another low here somewhere at some point. Now, so there are lows and highs on uptrends and downtrends. But now the difference is on a downtrend, it's a lower low, sorry, a higher low. Sorry, I'm confusing. So it's a lower, it's a lower low, a lower low, a lower low, a lower low. So high, low, this low is lower than this one. So this would be a lower low. So let me just write that out right there. This will be a lower low, okay? A lower low, okay? And then we see yet another lower low, okay? And it can just continue dropping like that, creating lower lows. But what we see happen on this chart is that this was the lowest, and then it started now pushing up and kind of consolidating, okay? Now on this other end, on an uptrend, we're forming higher highs, right? So we're going to be forming higher lows, right? So this is a higher low vis-a-vis the first low here. This is also a higher low. And so on and so forth. Now, where do we bring in the topic of swing highs and swing lows? So price has pushed down, okay, from this high to this low. Let me use this tool, the path tool. So it comes from this high to this low, then bounces off that level and then forms another low, bounces off that level and then drops to this low, and so on and so forth. So basically, okay, this here was a swing high and this final level here is a swing low. This could also be a swing low, okay? This could also be a swing low vis-a-vis this swing high. This is could be a swing low here vis-a-vis this swing high. So as the highs and lows keep changing, they interchange in terms of the swing highs and swing lows. So in as much as this is a lower high vis-a-vis this is also a swing high vis-a-vis this low here, which is also a swing low. So I just want to summarize this in this case because to avoid confusion. So I'm just going to draw it out. I'm just going to draw this out. So how I tell people to identify the swing low. So this is, I'm drawing out a candlestick, okay? So I did art in school, but I didn't go too far with it. So if my skills are not too great, don't shoot the messenger. Now, this is a candlestick chart, and I'm going to assume that let me assume that we are headed down, okay? We are headed down, and then maybe we kind of now stop heading down. We kind of like now maybe are consolidating or whatever. So I'll just change the colors of this candlestick. I'll change it to like what? Green, hopefully, or blue. Yeah, so you can see this. Now, this is a downtrend. You can clearly see that price is pushing to the downside. I hope that makes sense. These are candlesticks. I've just drawn them out. Now, how I look at it is, for me, this would be the swing high candlestick. This here would be my swing high candlestick right about here. Okay, this is the high. And then it pushed down. So I'll use this to show direction. So price pushed down to this low down here. Okay, to this low down here. It moved from this high up here to this low down here. So this is the swing high candlestick, and this is the swing low candlestick. And then at some point it formed the base, and possibly let's say maybe it began to push up. Just keeping it very simple, just for the explanation of this video. Started pushing higher and higher. So as it begins to push up like that, okay, it forms another swing, let's say another swing low here and another swing high here. So we could continue, just pushing on up. Now, when we stop pushing up, like we've got into this zone here, and then maybe we start pushing down again, and the cycle continues, okay? So let's say I'll just change this back to, sorry guys about that. I'll change this back to red. So now we are seeing price pushing lower. Okay, so you can see that now price is now pushing down. It has come up, bounced off. So this candlestick here is a swing low or this is a candlestick now that begins to push price to the upside. So this is a trend down. Now when the price started moving down, as it left this high here, okay, this was the swing low. And it pushed down and then formed a base here of sorts. Maybe when price even tried to push lower, okay, and then began to push higher. It didn't quite continue downwards, but the next candle that formed here, this second candle vis-a-vis this one, continued to push the price higher, right? Now, when that happened, this became the swing low. So we have our swing high here. And then we have our swing low here. Our swing low candlestick here. And it could be anything. It could be a rejection candle. I'm just putting it at a base, normal full candlestick. It could be any type of candlestick, as long as the swing high forms at the end, at the beginning of a trend. Whether the trend, in terms of at the end of a trend, and at the end of an uptrend, and at the beginning of a downtrend, and a swing low forms at the end of a downtrend and at the beginning of an uptrend. So this is your swing high candlestick. This is your swing low candlestick, and this is your swing high candlestick. So in the scenario where, because sometimes guys ask me, how do we use the Fibonacci? You're going to drag your Fibonacci from your swing high candlestick, the very end of it here, to the very low. And I'll cover that in a separate video. I don't want to mix it in this video. I just wanted to explain what is a swing high, what is a swing low. So when this candlestick comes here, it forms yet another swing high. And then, why? Because the price stopped pushing to the upside. Now let's go to the candlestick chart itself, okay? Now it's very clear. We can see, okay, fine, this is a lower high vis-a-vis this previous high, right? But this candlestick here can also be a swing high candle. Okay, why? Price stopped pushing to the upside and then began to push down. So this bearish candlestick is the swing high, and then price pushed down. And let's say This was the first level it stopped at this lower low here. This candlestick now is a swing low. Now, this would be another swing high candlestick vis-a-vis this candlestick here. I'm sorry, yes, vis-a-vis this candlestick here. And then it pushed down and formed a base here. So identifying the swing highs and swing lows, it's not necessarily a very complicated process. I keep telling people, just look at it from a very basic level. Price pushes from a swing high to a swing low, to a swing high to a swing low on an uptrend, to a swing high to a swing low, and so on and so forth. In a downtrend, it moves from a swing high to a swing low, a swing high to a swing low. But then you need to understand that we are forming lower highs on a downtrend, and we are forming higher highs and higher lows on an uptrend. Downtrend, lower highs and lower lows. Uptrend, up higher highs and higher lows. Swing high, the very high point on your chart that you can see the candlestick price stop pushing up. Swing low, the very low, okay, on your candlestick. Now, why this was initially a swing low would assume that you don't know what is happening outside of that. So you haven't seen this other pattern. So if you see price begin to print upwards, you would identify this as the swing low. But now, because we saw price print continuously, it stops being a swing low, right? Okay, because you're finding lower lows forming and price is still continuing on the downtrend. So this would only have been very significant if completely price stopped here and started pushing to the upside. Okay, as we can see, this was but we are looking at it vis-a-vis where price was coming from. So this was a swing low. However, which are the best swing lows and swing highs to be looking at? The ones at the beginning of a trend or at the end of a trend. So really, this would have been a good swing high. And then this here, possibly a good swing low. Okay, if price just stopped here. Okay, so I hope I've not confused you. Same with the uptrend. What is obvious? This is a low here. This is a low, higher low, higher low, higher low, higher low, higher low. But when you're looking at price pushing up, how do you put your fib? For me, this would be my swing low here, or this would be my significant swing low. This swing low here kind of sponsored this swing high here because price just continued rallying from this low all the way to this one. Then it rejected. Now, this rejection is what helps me to identify this as a swing high. Price pushed up and rejected and continued on its way down. This is why this is a swing high. Now, price rejected here, stopped the momentum to the downside and pushed up. So for me, this is a significant swing low, right? But you can see this keeps on going on and on. So I hope this video has helped to clarify what a swing high, swing low is, what an uptrend and a downtrend is, what just basically the anatomy of price, and so on and so forth. And if you found value, okay, my beginners, if you found value, please like, subscribe, and just bang that notification bell. Thank you guys, and see you soon.